Welcome back for part 2 of our first-time homebuyer series. I'm Yvonne Hunt, Vice President of Sales and Marketing with eListing Link, and I've invited Dave Leonard back for his advice on common roadblocks for first-time homebuyers and what you can do to overcome them.
Thank you. It's nice to be here again.
Well, you're welcome. So, Dave, what would you say are the most common obstacles for first-time homebuyers?
Well, I would say the most common obstacle is the credit score and credit history.
Well, it makes sense that credit score be pretty important. So are you talking about the actual credit score, or is it that they don't have enough credit?
Well, it's a little bit of both, but the primary is the credit score. Banks are looking at the credit score first. They have a threshold there, and if you don't meet it, then you won't be able to qualify. And then they take a look at the credit history if you do have the credit score.
Okay, so what are they looking for, 640?
640 is the credit score of what they're looking for the government financing, yes.
Okay, well, I checked my credit, and it's between 580 and 600. What can I do to improve my score?
Well, first, you don't want to do anything. You want to talk to a mortgage professional. He'll be able to take a look at the credit, see why that score is happening, and steer you in the right direction and how to get to that score that we need it to be.
Okay, well, that's good advice, because a lot of people think they can do it on their own. So talk to a mortgage professional.
Yes,
got it. Okay, here's another one. I'm a recent college graduate, and I'm just starting out, and I have student loans, and they're pretty much on time, but should I defer them, or should I just keep paying, or what?
Well, rule of thumb, if you have student loans and you can make that minimum payment, it is a good thing. It helps build credit history, and it helps with your credit score. However, if you are on harder times and you can't make that monthly payment, and you go ahead and you get that deferred, there are still ways to get mortgage financing with having that student loan deferred.
Oh, wow. Okay, that's good news. Most of my clients want to know about down payment and how much they need. And even with the $100 down program through HUD, or if they use a down payment assistance program, you should still have some money in the bank, right?
Yeah, you should. If you're going out and you're buying that $100 down program, you're going to want to have more assets in the bank. There are other costs associated with the mortgage finance process. So if you do the $100 down program, we would like to see at least 2% in savings somewhere of that purchase price. So if you're doing a $100,000 loan and the $100 down program, around $2,000 in the bank. If you stick with your traditional FHA mortgage with 3.5% down payment, we'd like to see about 5% floating around somewhere. So $100,000 loan, 3.5% down. We'd like to see 5% in assets. That's $5,000.
Okay, well, I don't really have that much money. Should I just keep saving, or?
You can keep saving, or there's other avenues. You can borrow from your 401k. You can also get a gift from mom, dad, or a blood-related relative.
Wow, that's pretty cool. So I can ask mom and dad for some more money. Okay, all right. See, Dave, that's why I keep inviting you back. You always have excellent information and advice. So thanks again, folks, for tuning in. And I hope you'll tune in next week for part 3 of our series, How Much Home Should I Buy Based on My Income? See you soon.